ESG funds are a type of thematic funds which invest in socially reliable companies. To understand more on this, we have Aashish Sommaiyaa with us, who is the Managing Director and CEO at WhiteOak Capital Management. Hello, sir.
Hi.
Pleasure to have you here.
Thank you.
I want to start by asking you that what is your whole assessment about ESG funds?
See, I think there are two things. Fundamentally, I think it's not that it should just be ESG funds. In my personal opinion, ESG, which is environmental, social, and governance related consciousness, or the impact of companies on each of these fronts through the businesses that they conduct. I think it's not just about running a fund with a theme. I personally think that this thought process should be integrated across funds into any kind of stock picking. Let me explain why I said that. So, when you look at the stock market itself, right, at different points in time, depending on macro environments, different types of sectors and different types of companies might get tailwinded or headwinded. But if you leave macro headwinds and tailwinds aside, and if you look at real long-term thinking, you know that at the drop of a hat, analysts who value companies, they talk about discounted cash flow, right? And that involves for them to forecast year 1, year 2, year 3, cash flows far out into the future. And then you arrive at the present value of those future cash flows. When you're projecting future cash flows, isn't it true that in some form sustainability, longevity, all of this is embedded into that thought process in any case, right? So what I feel is that it's not about having funds which follow ESG as a theme. I personally feel that anybody who thinks of terminal value, anybody who thinks of real long gestation investing, they all need to be cognizant that when you are projecting cash flows far out into the future, all of this thought process is integral to those projections that you are making.
How has the growth in terms of AUM or returns been in this category?
So, if you ask me, like you said, I represent WhiteOak Capital. So first, let me clarify that for us, it is integral to our thinking across funds. That's the first point. Second point is, if you look at ESG funds as a category itself, I think last 2 to 3 years, specifically after 2022, when the war broke out in Europe, Ukraine-Russia war. After that, obviously, there was a big spike in coal prices, commodity prices, energy prices, and oil and everything, right? So last 2 to 3 years, if you ask me, and defense, for example. So last 2 to 3 years, if you ask me, everything which is anti-ESG, anti-governance is what has been top of mind for the market. And if you look at it purely stock market terms, this is what has really outperformed in last 2 to 3 years. And I think that has also weighed on the scale or growth of ESG as a concept or ESG themes. But I think that is only here and now. Like I said, as you go along, you will find that people who are long-term investors will again bring their focus back to sustainability and impact assessment. In fact, like for example, if you ask me, I believe that funds should be always launched when they are out of favor or when they are counter-cyclical or when they are, contra. So it's quite coincidental, but we ourselves have filed with the regulator for an ESG fund now, right? So last 2 to 3 years, they haven't grown. And I think that is more related to the macro environment at that point in time. But I think that is just temporary. It's a passing phase. I think in the long term, like I already mentioned a couple of times, sustainability and impact assessment is absolutely integral to performing any kind of investment analysis.
When this theme came out, a lot of fund houses, around 8 to 9 fund houses had come up with themes. But lately, we haven't been seeing this fund category being launched by any of the fund houses. Why do you think that would be so?
Yeah, because, like I said, near-term performance, near-term performance or recency bias, that what has done well in the last 1 year or 2 years, that weighs a lot on the minds of product guys when they're launching products. And that weighs a lot on the minds of investors when they're deciding what type of fund to really invest in. And the best of advisors find it very difficult to go against the grain and be contrarian in their advice, right? So I think it's only here and now, like I said. And if I speak for myself, we are very positive on the concept. Like I said, it's integral to investing. So we ourselves are launching a ESG thematic fund. Awaiting regulatory approvals, but not in the distant future. I think anywhere in the next quarter or so, we'll hit the market.
So what are the Sebi guidelines with respect to ESG funds?
So, in fact, in the last few years, maybe last couple of years, in fact, the regulator has been very supportive, and we are on the same page. The regulator has been very supportive of integrating impact assessment and ESG concepts into the kind of funds that are being managed. So the regulator has gone one step further. Previously, ESG was one theme or one category, but now ESG has been divided into 6 different categories. You can launch. So ESG as a broad category, and there are 6 subcategories in which you can launch ESG themed funds. So take an example. What we have filed with the regulator is called a best in class, meaning that we are filing an ESG fund. The subcategory is best in class. And when we say best in class, we are looking for companies that are best in class on governance. Of course, with due importance to environmental and social impact as well, but best in class on governance. And then expanding further on the guidelines, what we need to do is obviously, like take an example, bond funds. So in bond funds, we disclose the rating of the companies in which we've invested, but we don't give our ratings. We give ratings from CRISIL or ICRA or CARE or any of the third party. So same way, when I say that I've constructed a portfolio which is best in class on governance, it is incumbent on me to appoint a third party agency who will also disclose their ratings for the companies in which we have invested in. As in, where do they fit in as per their assessment? It's not just our assessment. Yeah. So I think there's a lot of science which has already been put into thinking of these categories, how funds in these categories should be placed, what is the best framework to offer. So yeah, we are quite excited about this space.
So are there enough companies where investment can be done? I mean, see, there can be a lot of good companies with respect to governance, but what about environment and sustainability? Do we have enough?
Yeah, so I think it's an evolving place. I mean, if you see the regulator has, when you see BRSR and, going the BRSR framework, and, companies have to disclose those. And we ourselves have seen, when we are working in this space, we ourselves have seen that year on year, if you take last 3 years, year on year, the quality of disclosures and the focus on these areas is on the rise. Yeah. So, this is always relative, this is always a moving target. I think if you ask me 5 years back where it was, 3 years back where it was, and 1 year back where it was, I think there is, steep change in disclosures and steep change in the focus. So I'm sure, the space and the universe is consistently evolving. And, we will never be able to, everything is relative, right? So let's say there is a sector, there are 5 companies. Now it's optimization. You have to find relatively which ones are superior. We can't look for a utopian scenario where we say that, okay, is this the global best? Correct? Because we are not constructing portfolios in a vacuum. We are constructing portfolios ultimately in a relative world, right? So while that is our focus, we still have to look for the best in class, which is relative to the universe, relative to what is available within the sector. So I think some of those optimizations might need to play out. I don't think we're in a place where we will be able to make absolute judgment on is this the best, compared to say global standards or compared to the ideal world or something like that.
Are there any specific sectors which form the part of the ESG funds? Like we've seen certain companies invest in IT sector, pharma, and consumer staples. So what exactly could be part of this ESG funds?
Yeah, I mean, look, so when let's say you look at a social framework, what will happen is that, companies which are, say, for example, alcohol, tobacco, some of these are no-brainers, right? I mean, that is obvious that people speak about. And then there are areas like, say, for example, defense and mining and coal and some of these, right? So there is environmental assessment to be made. And then, of course, companies have to obviously how they are conducting themselves, what they are doing to improve their impact and their footprint, right? So one is the nature of business, but then also what are the companies doing to improve their footprint? Third, let us say if you look at, say, for example, governance, the key is, minority shareholder treatment, right? What type of disclosures companies are making, how clean their books are. So for example, we have internally forensic accountant within our team itself, right? So I think that there are various facets to really look at. Some sectors, they would find it difficult to, have curative measures. And in some sectors, maybe it's relatively, I can't say anything is easy, but relatively simpler for them to, enhance their footprint. So yes, there are some sectors which are challenging, but by the by, I think if you look at the broad, if you look at the broad market, there is enough to invest in.
What is the demand like for this ESG funds? Are Indians ready for this? And where does it fit in one's portfolio?
No, so I can tell you, see, there are all types of investors, right? I mean, it's about evolution, it's about thought process. There has to be a critical mass of investors who start thinking that I'm not just looking at returns, but also in the process of making returns, what type of impact the businesses I'm investing in the process of making returns, what type of impact they are having on the broader, society and the planet, right? So if you really ask me, there are all types of investors. I don't think that it is something which is widely demanded for. It is still at a stage where we as investment managers and we as investors need to educate. And from time to time people will question that how is it impacting returns. But I think returns are not the be all and end all. I think the impact is what we need to educate people about. At the same time, I wouldn't say that it's a blank slate. Clearly there are some segment of investors who are aware of this, right? And then depending on macro headwinds, tailwinds and market performance, the sentiment keeps fluctuating. So there is some segment of investors which is there. Beyond that, I think we need to educate. That's how I put it.
What are the risks and opportunities investors must know about this?
No, look, I think investors, like I already told you at the beginning, ultimately all investment is present value of some future cash flows. And anybody who does the arithmetic of a discounted cash flow knows that beyond the foreseeable future, you will ultimately lump up everything as a terminal value, right? And terminal value typically forms 50, 60, 70% of those DCF equations. So if you are somebody who doesn't understand the risks involved with lack of sustainability, or if you're somebody who just doesn't understand that businesses can get waylaid or businesses can get decimated if they are not conscious of impact and of the long-term sustainability, then I think those investments are going to suffer in a big way, right? There are few things like, say, for example, internal combustion engines, right? So this is the most front-end center. This is what people know, that, okay, their PE multiples have suffered. They have lost value over a period of time. Globally, there are concerns about these sectors. So by now, people should have taken that as an example and understood, right? That, ultimately, how do PE multiples start declining? If people can't see the future, if people can't have visibility, sustainability, if there is lack of governance for any reason, PE multiples start to taper off. So that's the biggest risk front and center, I think, that people should be conscious about. Why is it that some companies demand a certain PE multiple in the market, and why is it that some companies start losing PE multiples, right? I mean, there's no bigger manifestation than that.
So what are the global trends with respect to ESG funds? Globally, what's happening? Is it similar to India or different?
No, I think, say for example, European fund industry, say Europe, I think there is a very high level of consciousness. World over, I think the level of investor evolution, the level of conscious may differ, right? And world over, at the same time, it has happened that last couple of years, it's not done very well because of geopolitics and because of the macro impact of commodity prices, etc. So world over, it's the same. It's just that in Europe, for instance, I find that amongst investors, especially institutional investors, the thinking is a little bit more evolved, and they are not into returns at any cost kind of mode. Whereas in some, like say in India, some investors are not yet aware of it, and everybody is just outcome focused. But not so. I think there are certain parts of the Western world which is far ahead of us.
Thank you so much for those insights, Aashish.
Thank you.
Thank you.
If you like the video, do like, comment, share and subscribe.